Hey everybody, Chuck Barone. Monday, May the 22nd, 2023, and we're off and running on another week of crazy. This week's going to be a little less than we've been getting, I think, and we'll go through all that anyway. Before we get started, I want to welcome everybody to the show. We appreciate you guys being here. We appreciate you guys watching the videos and supporting the show every day. You know who you are out there, guys. You know we love you. Anyway, let's look at this market today. A big nothing burger today. Really, the market's just waiting for data, I can't believe that they're all excited about this debt ceiling thing. Or either that or that's just the excuse of the day. The markets today, not really much happening. It's been like this the past several weeks, where Monday and Tuesday are very quiet days. Small up, small down, mixed results like we got today. The next day, basically, if they had a small gain, they give it back, and now the data starts rolling in and the markets react. And that's kind of what we've been getting. It looks like we're going to get more of the same this week. So the stock markets today, mixed results. The Dow down 140, 33,286. The S&P basically flat, up less than 1 point, 4192 on the S&P. The NASDAQ gained 62, 12,720. So the markets, there they are, nothing much. The bond market, yields going up a little bit today. Bonds selling off. You have the 10-year up 3 basis points at 3.72%. The 2-year up 4 basis points, 4.32%. So there you sit. We got a 60 now, 60 basis point inversion between the 10-year and the 2-year. So it's widening back out. It was narrowing down. It was at one point about 115 basis points. Got narrowing down to 40, now back up to 60. Just a lot of uncertainty in these markets is shown, by the way. These rates are just going up and down and all around every day. It's crazy. Dollar today, not much, up very small. 103.24 on the index, nothing there. Metals today, strong dollar, down metals. Gold down 550. $1,972.10 per ounce. Silver down 20 cents, $23.63 per ounce. Still good solid prices for gold and silver. A little bit of a correction or resistance or profit taking or whatever it is, but the future looks bright for this stuff, guys. Hang in there. Oil today up very small, up 26 cents per barrel. 71.81 for a barrel of West Texas Intermediate. Right in the trough where we've been telling you guys, between 70 and 75. That kind of seems to be where it's comfortable, and that's where it sits. Bitcoin today, nothing day, down $50, 26,848 for Bitcoin, holding its own, quiet day. As we do every Monday, we're giving you guys the news you guys need this week, the data we'll be seeing, stuff that could possibly move these markets, affect your wealth. Today, no real data coming. Tomorrow, we'll get new home sales. Those are expected to be down, which is kind of surprising because builders have been having their way. Now, they have been building less and, of course, charging more. But new home sales expected to be down tomorrow. On Wednesday, we'll get the Mortgage Bankers Index. That's also expected to be down. Thursday, that's going to probably be the day this week where the markets move. We'll get our GDP numbers for the first quarter. GDP is expected to be up 1.1% in the United States for the first quarter. That's where the GDP Now tracker has it. It's been pretty accurate till this past quarter. So we'll see what happens there on Thursday. Also on Thursday, like we do every week, we'll get our jobless claims. That's going to be a big one. They're going to be watching that. Last week coming in well below expectations at 242,000. They were expecting 265. This week now they're only expecting 250. We'll see where the number comes in. Friday, which is going to be a short day. I guess the bond market closing early on Friday. We'll get durable good orders, which are expected to be down big. Not great for manufacturing. We'll get personal spending, which is expected to be up. We'll get personal income, which is also surprisingly expected to be up pretty good. And we'll get some more information on the University of Michigan Consumer Index. That has not been showing good news for the way consumers are feeling about the economy, their financial futures, where things are. A lot of people talking about doing worse than they did last year. 22 was not a great year for a lot of people. So this data, not a lot of earth-shaking stuff in here, but we know we got a Fed open market committee meeting coming up pretty soon, a couple weeks. So we're trying to get a feel here for where we're going at that open market committee meeting. So today, quiet data day, of course, they always have to fill it in with the fluff. So you get the government yo-yos and all the big shots and big wheels out talking today. Neil Cash and Carey, Hubbard, Meester, all the usual Fed people out talking, confusing the crap out of everybody with completely mixed messages. Hubbard insisting that we need at least 2 more rate increases. Meester saying it's probably too soon to call the cycle over. Cash Carey saying he's willing to have a pause coming up in June and see what happens. So naturally, not on the same page. Nobody's saying the same thing. So everybody kind of going, what in the hell does all that mean, Now, I tell you what I think, and I have told you guys, I believe they're going to do the pause this month. I think they're really hoping that they can kind of get inflation to continue coming down without raising rates again, without doing more damage to the economy, which is seeming to be weakening here as we speak. I think these mixed messages that we're getting from these Fed chiefs show that there's some division in the Fed. And that's not a surprise. You're going to have your hawks and you're going to have your doves. But there have been a consensus up until now. So we'll see if that turns into something public. If it turns into actual debate on what happens with rates at the June meeting, it's going to be fascinating. And this kind of stuff, like I said, it's a lot of fluff. I think it's just, they want to give people what they want to hear, apparently, because they've given us every message possible. But the time will tell, and we'll see what they're actually going to do. News today that was interesting to me, we've talked about this on the show, commercial real estate, probably the hugest threat right now to our economy. It's a huge part of our economy. We've talked about it on the show and told you guys. We have $1.5 trillion in commercial debt rolling over between now and the end of 25. So the next 30 months or so, they have $1.5 trillion of debt that's coming due. Now we know these guys are not going to just pay this debt off, right? So it's going to have to be refinanced. And they've got some problems with these refinances. We know what's been happening with commercial real estate coming down in value. We know commercial real estate having difficulty with tenants, lots of vacancies, tenants not expanding their leases, not taking new leases, trying to get out of leases, lots of defaults, people leaving. Workers don't want to come back to the office full time. A lot of businesses have way more space than they need. The future not looking bright for commercial real estate. Costs of everything going up, as we all know. So now it's starting to show even at the top. I was reading today, Blackstone in talks with their lenders on a $310 million senior note coming due in July on a gigantic premium commercial property in Chicago in some fancy neighborhood there. The note coming due in June. No, I'm sorry, the note coming due in July. That's a big one, $310 million. Now these talks are seen, we're looking probably to get, they don't really want to refi these loans because the rates they got when they took them out several years ago, significantly better than the rates that are being offered right now. If they can even get a rate, if they can even support the loan with the cash flows that they have now. So these preliminary talks, Blackstone, of course, out there complaining about the tough market conditions and a very difficult environment and about challenges in the marketplace and, of course, blaming the workers. Those damn workers don't want to come back to work. But not looking good for commercial real estate because when they have talks like this, okay, typically that's showing you there's a real threat for default. And we'll see if Blackstone going to walk from this property. So we'll follow through on that. The big news, of course, we've been hearing about is like this debt ceiling. They're calling it a crisis. This is political showmanship. This is more bread and circuses. We know they're not going to let the United States default on its debt. I tell you this right now with as close to 100% certainty as I can say it. No president, no Speaker of the House, no congressman, senator, or anybody in the government, none of them want to be the one that gets the blame for the United States blowing up its credit rating, the dollar as a reserve currency, world markets, its own stock market. The White House today, their Council of Economic Geniuses, coming out saying today that not only would a default on the debt crash the economy into a recession resembling 2008. Okay, now that was real estate based. This one would be a completely different beast. It would be really ugly stuff. They say, the White House economic advisor said a default would trigger a collapse in the stock market of 45%. 45%. Oh, the calamity it would be, guys. Oh my God. We should all be crapping in our pants. We should all be very worried. We should all pay attention to this, man. Really. So they can steal like crazy over here while they got us looking over here at this big nothing burger, man. I tell you right now, there's no way they're going to let the United States default on its debt. I will do something absurdly stupid on this show, film it so you can all show it to your friends and say, look at this retarded dumbass Chuck Barone who said there would be no default and there was, and now this is what he had to do to make up for it. I'll figure out something stupid and that would be worth showing to your friends. But I'm telling you, it's not going to happen. There's no way. We know that we cannot default on our debt. We know this money was already spent a long time ago. This is not spending tomorrow's money, and they're going to continue to do that anyway. So, guys, put this debt thing aside. Know it's a bunch of show. It's designed to keep the masses distracted, which it's successfully doing, moving markets. Or at least that's what they're saying is moving these markets. Anyway, fascinating week coming up. We'll be here to fill in the blanks for you guys, to let you guys know what you need to know to protect yourselves. Stuff we've been saying all along and been harping on forever, the very basics, all still as true today as they ever have been. Save your money, guys. There's going to be opportunities coming to invest it later. Right now is the time to accumulate capital to invest. We're back tomorrow to bring you guys the news you need. If you like what you're hearing, please hit the like button. It helps change the algorithms and gets the video out to more people. Ask your questions in the comments section. I will be on today, I promise. And we appreciate it. We'll be back tomorrow. Till then, guys.